Welcome back to the channel. We'll be going over the SP 500 and the Nasdaq 100, exactly what's moving the markets right now, and overall what happened last week and going into this week. Now, there were some pretty big data releases. There was some pretty big news being released overall, and most of all, there's a lot of reports being released over basically going into Friday and the weekend that there is this thought of a Fed pivot, and that's kind of the thesis that I want to attack as we start this video. We're going to be covering what's happening here and overall what you should be expecting with this as well. Before we get into that, to ask you to consider doing two things: liking and subscribing, because I'm going over the technical analysis, the key levels to be watching, stocks to be looking at for the trading week, and overall the big news so you are never taken by surprise. Let's get into it. So what we're gonna do, again, we're gonna hop right into this and we're gonna talk about where we are and ultimately where we are going, right? So as we jump in here, I want to talk about one on the technicals, and then we're gonna get into a little bit of the fundamentals, and I'll wrap it up at the end as well. Now, I want to point something out on the daily chart, and this is something that my partner Jay Ream has been heavily mentioning to me, is the 20 MA on the daily. And again, I'm not a huge fan of a lot of these indicators, and we really don't use them. So if it comes to the RSI, MACD, or these crazy moving averages that people use, I don't love them on shorter time frames. However, I love them on longer dated time frames because they do act as resistance on those levels. So I wouldn't use something like the RSI on a 5-minute or even the hourly. I would focus more on the daily, maybe the weekly, possibly the 4-hour, but that's even kind of pushing it. Same with MACD and these other indicators, right? Because they don't take into account volume, and they don't really take into account the overall averages from the past week, if you will. So that's what I want to highlight, or at least focus on with that. Now, when we get into the 20 MA, I want to just highlight where you've been here. So we can look at the last move that you had going back in June, right? This is ES going to S&P futures. You can see you rejected, you got above, you retested, and you held basically for essentially, a month and a half, all the way through mid-August. You got below, rejected, held below, continually till right now. So you're seeing some glimpses of past behavior. And I want to highlight right now, before I go super far in this video, I want to say that I'm not extremely bullish on the market. Okay, I want to highlight that right now. I'm not long-term bullish. I do not believe a Fed pivot is occurring. So I'm trying to make sure that's known before you even spend too much time in the video, right? But I want to highlight some of the things that are happening here because I'm unbiased when it comes to my trading, and something I say all the time. If the market is indeed pivoting, you might see a little bit of upside. I'm going to try to profit on that, right? That's the goal here of the channel, is to, take advantage of the way the market's moving. Now, as we jump in here, we can see you are getting that correction. You're bouncing off that. Going over into NQ, Nasdaq futures, you can see similar type of action here. You're getting back above it, but you haven't necessarily mounted, right? You've rejected, and you're trying to hold above right now. We'll see on Monday how we behave going into tomorrow, right? Similar behavior back here, but you actually mounted and pushed up during that same type of time period. So I want to highlight that. And you've also seen fails. You've seen holding above and then dumping right back through. So this is not 100% guaranteed. Nothing really is when it comes to trading, but I like to just point out discrepancies that we're seeing here in the market. Now, another thing I do want to point out here is that when we have this type of movement that we had before, we were going straight down and we kind of made a base here and then dropped right back down. Now, something I want to highlight here is that we are of sorts, forming possibly, I don't want to say this is the bottom, I'm careful with my words, but you did get a little bit of sideways action here. Now, we made new lows and lower highs, but now we're kind of trying to break out of this little trend, but you can see a little bit more stagnation here, kind of like you had here. Made a new low, but kind of stagnant, right? I just want to highlight some of the similarities that we're getting here. So you are having that on higher time frames like the daily. I want to highlight that. Now, when we go over some like the 15-minute, the 4-hour, shorter dated, again, I want to highlight where you're at here as well. Same thing I've been talking about on Twitter. If you're not on Twitter, I recommend following because I'm posting some of these charts. A lot of free content on there as well. You can see you're pushing up to that level. You're not necessarily making a new high yet. This is your high from, I believe this was Tuesday, if you will, of this week. Made a nice push, came back down. You're just sitting there. No real movement yet. And this was in the after hours as well. So we still have resistance on the horizon. I still think if you get into like the 11.5 to 11.7, there's still a lot of resistance there. I don't think you have a clear shot up yet. So I want to still highlight right now that the long side of the market, I see on the higher time frames, it is perking up. It does look better than how we have looked. But I also want to say that there's no clear shot. So some of the other, instances that we have had is we've had maybe a, overall, I'm just going to give you an example of maybe breaking the overall trend, mounting on top, and then there's not much liquidity up here. Then you just push right through and you get some volatility. It's a little different right now in my personal opinion. Okay, so as we go a little bit deeper, just stay with me. We're going to cover exactly where we are and how we see we're moving through this. So I still think there's resistance through 11.5 through 11.7, a lot there. Then it gets a little bit weaker as you get above. That's the thing we're watching for this week. Now we have earnings, we have stuff coming out about that. We're going to cover that here in a second, but I want to get into this here. Now, a lot of people were commenting on my last video saying that the reason we moved up wasn't really because of the dollar or what was happening there, which again, I disagree with. And I'm not going to cover the same thing as I covered in yesterday's or Friday's video. So I want to make sure that's known. Do you want to go watch that video? It's this video right here. And I'm basically go over the dollar, what was happening there. But here, this is, people believe this is what's happening, is that the Fed is set to raise by 75-point hike. And then apparently they're pivoting, if you will. This is the goal. Now, I want to highlight a previous article that was also written on this as well on the 18th. Okay. The Federal Reserve won't pivot until the labor market shows significant signs of cracking. And I keep saying this here on the channel. This is a fundamental core belief when it comes to inflation, right? And the thesis behind this comes back to one clear notion, and we talk about it often. Right now, you have jobs. The price point and how much people are getting paid is rising with inflation. So you have people getting increased pay while inflation is occurring. It makes logical sense. Companies have to pay people more if everything costs more, right? The rise of pay never outpaces inflation, okay? And this is just a common core belief when it comes to financial and economic viewpoints, right? This makes logical sense. In the history of time of our economy, it's never happened, and it's not going to start right now. So what the Fed is saying, that basically inflation is going to be an issue until we start to see a decline in jobs. And right now, there's a core belief that we're almost guaranteed to see weak jobs posted on November 4th. That's about a week and a half from now. But I'm not going to, bet all my money on that, right? I'm not going to just bet all my money and say, oh, well, we're going to go the upside because we should, hypothetically, we've heard this a lot. We should get decrease in jobs. We should see inflation being handled. We should. And it's just not the case right now. If we look at the chart right here, jobs are just coming more and more available, right? I want to highlight that. As you come back to this article, that's what's basically happening, is that we will have a very thoughtful discussion on the pace of tightening at our next meeting. Okay, now I want to highlight, what did they say? Let's talk about what's really happening here. The ceiling for these rate hikes, if you don't know, and if you want to get a good look at it, you can go to investing.com and look at the last rate hike, etc. But the ceiling for these rate hikes was set at 4.5%. Well, now the ceiling has gone up higher to almost 5%. And who's to say that it won't go even higher? So they're saying that, yes, the Fed may be pivoting, but they're sugarcoating dog crap with a little bit of whipped cream on top so it looks a little bit better, right? So they're saying, yes, we may, have a thoughtful discussion of the pace of tightening. However, we're going to tighten even further by raising rates even higher when we weren't supposed to raise rates in 2023. And on top of that, they're not going to be cutting rates throughout the whole year of 2023 based on their projections right now. And if we know anything about the projections of the Fed, what do we know? That they've all been terrible and they've all been lackluster, that everything's come out worse than their actual projections. So if we look at this, we have to understand that if we take what we've done with their projections over the past few weeks, what do we know? Just saying, I would project going into 2024, beginning of 2024, we don't even see rates being cut. I'm just saying. And I would also project that we see even more rate hikes coming. I'm just saying, because right now, inflation has not been touched. It's actually going up with decreasing oil prices, decreasing energy prices. Inflation is still going crazy. You have countries defaulting. It's a major issue, right? It's a major, major issue. So that's my opinion on it. That's where I stand. I hope this makes sense. But again, it seems like most people in my comments were reading this article and they didn't really buy into it. They just thought this was the reason we were going up. Again, I believe it's totally based on the dollar, what's happening with Japan. My personal opinion, could be wrong. But again, that's what you come here for, my opinion. It's not financial advice. I'm basically just an indicator, and that's all you use me as, right? So going back in here, going back where we're at here on S&P, going on Nasdaq, I want to highlight what happened here, and I want to highlight where we've been. Again, I like using Yahoo Finance because it's super simple for you guys to use, and it's also super simple, and I like for you guys to be able to follow me as well here on the channel. So I like to just track volume, and again, volume is the best indicator, in my opinion, that there is. And something that I've been highlighting is on this ascension, we're going to do the 4-hour chart really quick. I'm going to pull up the opens indicator so you can see as well. And basically, since we made our bottom right here, this day, we have been declining in volume, right? This whole upward move right here has been declining volume. So we've been going up with declining volume in hypothetically a bear flag, hypothetically, right? I'm going to point that out. So this is typically a bearish indicator. However, something interesting happened here on Friday. The volume stopped declining and we finally got a press out of this. Now, it wasn't in the direction that we hoped for, but the good news is you weren't heavy or really into any positions. I still have a very small position in Qs for December. That's it. That's all I have right now. Right? I haven't started entering heavy. I always tell you guys when I enter heavy, when I'm looking exactly what position. I always mention it here as well as in Discord as well. But I like to be really transparent with y'all so you know what I'm looking at as well. But we saw this volume increase, and this really made me interested in where we're going right now because we saw, again, basically since that dip, nasty volume, and obviously got that spike. So as we look at this, I'm not saying that you're invalidated for the downside theory on the short term, but I want to point out that there's a room for continued upside here, at least to test the highs of possibly 11.7, 11.75. I could see that happening early on in this week, not to mention with the news that we have coming out as well. So not only do we have this notion of a Fed pivot going into this week specifically, actually this is the last earnings, I recommend looking at what's really happening here with earnings as well. If we come over to earning whispers, again, I mentioned this in my previous video, you have a lot of earnings this week. You have Apple, Amazon, Microsoft, Meta, Alphabet. You have some of the XLP names, Coke, you have GM. You have big names coming out this week. And you could argue that this week is more important than last week. And last week definitely set the tone. But I want to highlight that it's starting up here. And if any of these earnings can be beneficial, which I want to highlight right now, based on last week's, it looks like they're going to be bad. I'm just going to highlight that right now. Based on those last week's earnings, nothing was really good. Netflix was the only good one, but it was because they did so bad in the previous earnings, which I thought they would do well. That's besides the point. You're just setting yourself up, and right now, and with these, if you have any type of good earnings, in my opinion, you could see a really nice volatile push to the upside. Now, people are going to say, Tyler, well, are you betting on long side? I am not yet. I am definitely flipping my notion. I'm definitely seeing the potential because as we look at equities, you're getting similar movement that we have had in the past, right? And if you are on my Twitter, then you've seen me obviously posting all these charts, AMD, Netflix, etc., right? So when we come in here, just look at how some of these are moving. I just want to I'm going to leave that indicator on for a sec and look at, for instance, Netflix, right? So from Netflix's earnings, we've been talking about this one for a long time. Basically, you finally get over 250 and you're on your way to 300 now. Right. And this is, from earnings, you popped it from 250 to basically 270, back down to 265. And now you're back up to 290 and you're on your way to fill this gap. Go to AMD, something interesting here. You haven't started that move up yet, but as we look at the weekly chart, again, you have to look at what's really happening here. I mean, you're operating down here at your bottom line demand. I mean, it's very strong. This is exactly ultimately what you want to look for in a trade. You're bouncing down here. This is a huge area, massive support. I expect to bounce. And if you look at this volatility, look at how much room you have. It's so illiquid there. We can pull up the VPVR. Massive levels. You could easily see a push back up if you get a bounce in the market to 72, in my opinion, here on AMD. And the list goes on and on. So you look at how beat up the market is and where we're at and some of the value that we have. And I believe AMD, NVIDIA, those are big valued stocks and value buys at this moment because long term they're going to thrive, in my opinion. But you have to acknowledge where this is at. And I like to come at this with a non-biased viewpoint so people can understand that I am not just a bear on the market. I am looking at the market to make money at all times. And as you look at this, you have to be able to identify when you're seeing a sort of not pivot in the Fed, but pivot in the market, right? Especially with there being more potential for upside, right? So what I want to highlight here is, yes, as we look at indexes and where we're at, like for instance, right, as we look here, ultimate target, I keep saying it, I'm going to mention it over and over, pre-COVID highs, that's where I want to see us go. Nasdaq has, a lot of room still to go. ES is definitely bouncing from that level as we speak, or not at that level, but it got really close and then started bouncing. So I'm careful as I'm here when we start looking at some of these stocks because they've already hit these big levels that we were looking for way back when. You have to acknowledge where the money making opportunity may be here. So for instance, with Microsoft, as we look here at the chart, I still think you have room. You have room to fill this gap all the way back up to 246. Now, it's not as much room as AMD, maybe not as much room as NVIDIA. You have room here to go back to 131. These are great stock picks. We're looking at Tesla, making almost a May new 52-week lows down at 201. They're setting up for opportunities. So I like where we're at. And before you get to, curious about what I'm buying and things like that, again, I'll post it on Twitter. I'll post it on here as well. But even if you don't want that risk, for myself, I'm buying long-term now. And I've been telling everyone, I told everyone, when you get below 100, you get below like 95 on Google, For me, big buy. So long term, I've been buying Google. I love it. Some of these others are a little bit more risky. Like I wouldn't be buying Meta right now. Disney, love it. Based on Netflix's earnings, Disney's going to kill it. I told everyone last week, you have potential all the way up to 103. I marked it out on the chart, and guess what? You're pushing up now, so you look good. So overall, we like where we're at. We like how the market's moving, and our broad scheme of where the market's going has not changed. I still think we are in trouble. Well, I don't think we're out of the hole. I think long term we have room, and we're probably going to get rejected again. It's important to realize, we look at the 4-hour chart, right? You're going to get these areas. You're going to get these bounces. We've got them already. Look at how we move. Just look at the past, because it's going to tell you what's probably going to happen in the future, right? You have the big shot down. You bounce up. Big shot down. Bounce up. Big shot down. More extended bounce up. Another shot down. New low. Probably get a little bit of a bounce, then come back down. This is what I'm looking at. This is what I'm looking to play the market. And I'm being patient, people. The last thing I want to leave y'all with is when you're looking at this market right now, again, I'm going to say this because it's not going to get old, and I want to make sure you guys are protecting your accounts overall. Right now, your goal should be to protect your portfolio at all costs. This is a weekly chart, people. If we look at this chart right now, protect your portfolio, look for longer term buys, because right now you are in a bear market, okay? We go back, this is the past, 10, 15 years so far. When is the last time we've had movement like this to the downside? You had some quick move back in 18, quicker movement in 2020 with COVID, but ultimately you haven't had this since 08 and the dot-com bubble, right? So be careful, but ultimately it's about preserving capital. Don't get too aggressive, but be looking for the longer term setups for your life, because ultimately this is a once in, maybe 20-year opportunity that you're going to get right now with buying stocks at these levels, because once we start going back parabolic, once we start showing growth, the money's going to be flowing back in for these opportunities. So be careful, but also be vigilant of where your stocks are at. I'll see you guys tomorrow.